GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to the weekly webinar. A really busy week coming up on the economic and earnings front. We've got US GDP and the Fed meeting this week. We've also got some huge company earnings from all the big US tech stocks, Amazon, Facebook, Apple, etc., all reporting earnings this week. So that'll obviously be big for US earnings, but also for general sentiment across all of Forex and commodity markets. We had a massive run up in the euro over the last week, following on from what has been a strong run really throughout all of this month. And so that will be the first thing we cover this month, more of that euro strength up through 121. But obviously, big reversal in Bitcoin over the weekend, and also some other things to talk about there. So I'll jump straight into it. Of course, if you have anything specific you want us to discuss, leave us a comment in the video. Any other comments you have, please drop a comment. Happy to hear them. Otherwise, click that like button. That really does help us with these videos. So this is the euro chart, and what I've highlighted here in yellow is these two bullish engulfing candlesticks. There's three of them actually, and I think it was this middle one that I hadn't even highlighted, which was last week's, but it just shows the kind of ongoing strength that we're seeing in this euro. Every time there's a bit of a consolidation, you can see there was kind of two inside bars, one first bullish engulfing there, where this body fully engulfed this reversal candlestick, and that was probably the start of it. There were two inside days, another bullish engulfing where the body just flew, it just didn't even stop from the open. Then we had two inside days again, massive bullish outside bar, that's what we mentioned last week. And then there was a bit of a stutter just above the 120 level, below 121. That is a reversal pattern there between the 50 and 61.8 Fibonacci levels, so it was something worth watching. But we consolidated for 2 days, another two, not quite two consecutive inside bars, but then this again, a big bullish engulfing candlestick. And as we start the new week, we're testing this previous peak here. Now there is a bit of a confluence of resistance here. It's the 61.8, it's the 21 level, and it's this previous little peak. But given the strength of the trend at the moment in the euro, I'm not inclined to necessarily consider this level so important. Maybe just an area to see another pullback from. But let's see. I mean, I think these patterns tell you there's real strength coming into the euro. People are buying barely even a dip. They're just buying a pause at the moment in the euro. So a lot of dollar weakness coming back into the market is what we can deduce from this. So that's where we stand. We're at the resistance level, so I would say you probably don't want to be buying underneath the resistance. That's always a good rule of thumb. But if we get another clear breakout through this resistance area, it's just more confirmation of the strength. If we do get a really telling reversal here, well, we've had a good run up. And if there's a bearish signal in terms of a candlestick pattern, something like this again, or a bearish engulfing, that would be interesting given all the bullish engulfings we've had. Something like that around this 121 level, then that would be worth considering after a big rally. Maybe a deeper correction is needed. But until we see something like that, it looks pretty bullish to me, and I'm expecting the price to continue higher given the strength we've seen so far. Moving over to the pound, and it's not nearly been so strong in the pound, but nonetheless, I would say overall looking okay. We put a double bottom in, we had a big rally up, but then we had a real big reversal last week where we came off the highs, we came off that 140 level again. See how these 3 weeks we reversed off 140, then last week, big drop down from 140. But if you're saying we had this big reversal up here, we've corrected for a few weeks, and we double bottomed, rallied up, broken kind of this trend line only has 2 touches on it, but you can sort of see it's working. And then if I drop down to the 4-hour chart, this was actually a line in I had last week just to kind of demonstrate how the pound is still making higher highs and lows. We had made the higher high, broke up through this declining trend line, broke up towards the 140 level, but then reversed all those gains again, but actually came back to that previous little peak. Coincidentally, also the 200 period moving average on the 4-hour chart, and also this this broken trend line, and the price is rallying back up, and we're up through 139 again. So given the strength in the euro and the weakness in the dollar and the fundamentals for the pound, which seem to be improving, I think, probably there's room to be generally constructive on this, and maybe this is just because 140 has been such a big, strong psychological level. One last sell-off perhaps before we rally up and break through it, and maybe test those old highs above near 142 again. For me, this trend is up, and it doesn't. You could make a bearish argument for you have the first drop, a little correction, and then we'll look due for another drop lower. That's certainly possible. But at the moment, I'm just going to go with the overall trend, and I like the fact that we've held on to this declining trend line, and it seems like we just rallied up as the first sign of the kind of change of trend, and we've pulled back from that, and then we're going to continue the upwards trend, is what it seems to me. Moving on to dollar yen, straight onto the daily time frame here, and you can see that we've just been on those other charts. The euro has been pushing up. Naturally, dollar yen has been pushing down, and barely any positive days, just trudging lower. You could see that this was the previous peak. We kind of rallied up, touched on it, and that's what really set off this giant rally. So if we use that as our bait rather than the absolute low down here, then we're actually testing the Fibonacci, the 50% Fibo level here. And there was a hammer pattern on Friday, dipped below what was it, basically 107.50 was the number we're testing here. We stalled around 108, then eventually dropped below it, rebounded from below 107.50, but now it looks like we're edging back down again. I wouldn't take too much of a signal from this, to be quite honest with you. The fact that we eventually dropped below 108 after stalling there for a while suggests to me that we're probably heading down towards 107. And then around 107 we have the 61.8 Fibonacci level. So maybe that's an area where after that level of weakness, maybe we could get a bounce from there. But the question is, do you want to be looking for a bounce? Potentially you do if you're in and out of this instrument all the time. But if you're just trading the trend, I would be thinking actually you'd more likely just be wanting to look for areas to sell a bounce into. And that could be something like this trend line that we did have through here. If the price was able to rally back up to above 108.50, maybe that would be an area where it drops back again, because it seems like the trend has switched for the time being. We obviously had a massive rally up, but just prolonged weakness now. And that was one other thing I wanted to mention. This to me seems very bearish. We had a big long-term declining trend line here, broke up through it, and I think we even mentioned it in the title last week that it's testing this broken long-term trend line, and the test failed, and it's dropped back through it. Now this month has not closed, obviously, so that's one thing to note. If we get a massive rally off the lows through the last week of April, then actually maybe we get our bullish confirmation in the dollar yen. But for the time being, that's not how it looks. It looks like we've basically made a failed breakout of this declining trend line, which is bearish. Okay, moving on to the Aussie, and this was really interesting, I thought. So we mentioned a couple of weeks back the failed breakdown from the head and shoulders pattern, and what's really funny is that that's happened again on a shorter time frame. So we broke up through this peak, rallied up, tested the neckline again perfectly. So obviously other traders watching this pattern too. And then on the shorter time frame, we had another head and shoulders pattern with a failed breakdown, and we rallied up from it. So sort of a what is above is below, some sort of symmetry happening in the market here. And to me, this seems bullish. Again, for the exact same reason that this false breakdown here. The bigger pattern was bullish. I think this is bullish too, and we've taken out the right hand shoulder here. Just to kind of clear it up, that's basically our, for left shoulder, head, right shoulder. We've broken above the shoulders, and to me that suggests we eventually head up towards the bigger neckline again, and I think we probably head up towards the highs here, generally based on that idea of dollar weakness, which seems to be coming back into the market. Obviously, I mentioned at the start there that it's the Fed meeting this week, so whether this dollar weakness continues will probably largely hinge on that meeting, although not much is actually expected in terms of change of language or action. So moving on to commodities, now we're looking at the oil market. This is WTI crude. So I've adjusted down this trend line a bit. I had a trend line kind of going through this mess here, but you can actually see the trend is kind of spread out a little bit. It was very strong. Yeah, it's kind of moved down, but it's holding on. These original lows through here, and it's basically held on to this trend line after this correction down to 57, broke up, and then we did talk about last week this area of potential resistance between the 50 and the 61.8 in terms of we had the drop, rally up, and then maybe people would sell the the correction from the first drop. That's the kind of classic pattern you see. Sell the top of B, ready for C. So that actually has happened. So that worked to some extent. You had a little false breakout through 61.8, then you had a bearish engulfing covering 3 days of price action, set up a nice little sell signal down here. What's interesting though is it only lasted for 1 day and we've ticked up again. So I think that just reflects the fact that the trend is up and that most people are probably not necessarily looking for short entries necessarily at this stage. So if this does eventually work, this sell from 64, it may take a little bit of time because the trend is obviously clearly up. For me, I would be inclined to just stick with this trend, and I think I said the same thing last week. Until this, until this rising trend line is broken, that would be a bit more confirmation, and then maybe we end up heading for a test of the 200-day moving average. Onto the gold market, and obviously we've talked on numerous occasions now about this double bottom pattern on the daily chart. What seems to have happened is that we had our we had this latest leg lower that kind of started with this double top here. And so if you use that as a Fibonacci level, you can see that we came just short of the 61.8 level, and we've dipped back to the 50. So we didn't quite make it to this previous peak or the double bottom objective. So I think if you're British gold, you're still really aiming for that double bottom objective somewhere up here, with 1850 as a bigger target underneath the 200-day moving average. Trend, if we can zoom out a bit, trend still more or less down, right? So that's what I said before, is this double bottom won't happen easily necessarily because people are still thinking in terms of selling the rip, and so they're obviously selling into this kind of this is an area that the price had kind of hung around a little bit in the past. It was support for a while, tried to break back above it, but failed, had that last leg lower, and now we're kind of messing around with that same zone again. So it's possible gold has a bigger dip. If it does, then there could be an opportunity back around the neckline, back around 1750. If we kind of get up that high, pull back to 1750, but you're still above the neckline, so technically the double bottom's still in play. That could be an opportunity to re-enter long in the market. If we get a bit of volatility that takes us lower in gold. Overall, I think the trend is emerging to be an upwards one, but it's coming off the back of a prolonged stretch of numerous months of weakness, so that's why it's a little bit hard going. Now into the S&P 500. Now, what was interesting is, remember last week I talked about how the RSI had got overbought for the first time throughout this rally of this year. There's always various trend lines to be drawn through the peaks, but there is another one here. So you've got a trend line to be drawn through these daily. Does that work? No, it started there. Basically, where these RSI peaks start. So we got overbought, and we've come back out of the overbought area, and so that is classically what you are looking for in terms of a sell signal. It goes overbought, and then it comes out of the overbought zone, and you look for a sell signal. Clearly, the trend is massively up, so you're going against the trend. And more likely than not, if you do take a sell signal in an uptrend, it's probably going to go wrong. But the reason you would do it is that maybe you get a few trades that are wrong, but if you take small losses, if eventually you get it right and there's a big correction, if you get even just another one of these, then you obviously can do well from if you hold on long enough for that kind of sharp correction lower. And we're certainly due one, because the market's just been going almost vertically higher in the last few days at least. And then interestingly, had this rising trend line drawn on the chart last week. We broke it. If you remember, I can't remember if it was this day or this day. I think it was probably Friday. It was this last sell-off, wasn't it? Or was it Thursday? Memory's failing me, but it was basically about the reports of a new capital gains tax in America. So obviously, US shareholders would have to pay more tax on any money they're making from buying stocks that are in the S&P 500. And naturally, depending on when that tax comes in and what it's, whether it's retroactive or, when that would, when you would qualify for that new tax, if in fact it happens, a lot of uncertainty there. And so naturally, some US investors would want to maybe quickly take profits before they owe any extra taxes, and while they feel uncertain about what their tax obligations are. And so we had one sell-off on the broken trend line, and we've rallied up. We're now testing the previous peak and that old trend line, and you can see that's the longer term trend line that we actually tested and kind of dropped back from. So right up at the record highs here, so not exactly a bearish scenario when you're right up at the record highs, but this, we made it above 4,000, had a good rally above 4,000, we're up to 4,200, potentially, with the tax uncertainty, depending on how these tech earnings go this week, Apple and the likes, maybe we're getting a bit toppy here in the market. Let's see. It's as I say, it's a low probability chance, but it would be interesting if it did. If you could pinpoint the top, you can get a nice trade out of it. Okay, and last but not least, Bitcoin. So you can see that we've broken a rising trend line here. Last week, I believe it was in the webinar, I was talking about a kind of bearish rising wedge pattern. It did prove to be pretty bearish. We broke down quite significantly. Again, cryptos sold off on that tax news. Again, a lot of people making some big money trading cryptos, and in theory, there's some capital gains to be paid on those cryptos. So a little bit of a freak out sell-off. But based on this last leg up, using this fairly significant low here in the end of January, which was around 28-ish thousand. Now we've pulled back 50% of that rally, and so you can see we had a hammer pattern. We dropped down again, not quite a tweezer bottom. It was a little bit lower, but we pretty much perfectly hit the 50% retracement level. We're rallying up from there. The day's not done. But if this is a bullish engulfing pattern of a hammer, that's pretty bullish, and maybe we're in for the price trend to resume. Even if the uptrend doesn't break out above 65,000 again, you'd think maybe we're going to get a test of it, even if the price turns a bit, basically this has been a bit more sideways recently. Maybe we're in more of a range between 50 and 65,000. But based on this pattern, at least off the bottom of the potential new trading range, that would be quite bullish. Okay, I'm calling it a day there. Good luck trading this week. Thanks very much for watching, and make sure to subscribe so you don't miss next week's video.